Welcome to the next Durham College Student Academic Learning Services video on debits and credits. If you have not watched our Introduction to Debits and Credits, I recommend you do so now before continuing with this current video. In this video, we are going to talk about the effect that debits and credits have on revenue accounts. Let's begin. Before we do our example, we need to expand the accounting equation. We do this because equity is made up of 4 different account types that change the equation in different ways. Instead of equity, we're going to use capital, withdrawals, revenues, and expenses. Notice that withdrawals and expenses have negative signs in front of them. That means that whatever the balances in those accounts are, those balances are subtracted from the equation. When those accounts increase in value, they actually cause the right side of the equation to decrease. Again, an increase in the account causes a decrease in the equation. Arrows will be used to show the effect of debits and credits on the different types of accounts. Up arrows for increase, down arrows for decrease. Remember that debits are on the left side of T-charts and credits on the right. In this example, the company completes a job for a client and issues an invoice for $450. Ideally, companies would receive cash immediately upon completion of the work they have done. Often, however, a company must wait to receive payment. The account used to record what a company is owed is an asset account called accounts receivable. The accounts receivable account, an asset, is increasing, so we know that it will receive a debit as part of the transaction. The company has done work. Whenever a company does work, the value of that work is recorded as revenue. In this example, we will use the account named Fees Earned. It is common for the type of work done to be part of the account name. For example, consulting fees earned. But for this example, we will keep it simple. The accounts receivable account was debited, so the transaction needs a credit. The credit is applied to the fees earned account. Rule 2 states that the equation must always be in balance. We know that the left side of the equation increased because of the debit. The only way for the equation to balance is for the right side to also increase. Note that there is a plus sign in front of the revenues account type. Whatever the balance of the account is, it is added to the right side of the equation, causing it to increase. Therefore, the credit to the fees earned account must have increased the value of the account. So now we know that credits increase revenue accounts and debits decrease revenue accounts. That brings us to the end of this video on debits and credits. Be sure to watch our other videos to learn how debits and credits affect different account types. If you have any questions about this material, I encourage you to come to the SALS Center located in room 204 of the Student Services Building and make an appointment with the appropriate Learning Skills Advisor. Thanks for watching.